All righty, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. And man, what a day we got to review. What a day we have to review. And it's going to be a lot of jam-packed information. I'm going to try to finish this up as soon as possible and get you guys out of here. So today is Saturday, March 29th. We will be reviewing price from Friday, March the 28th, 2025, year of our Lord, on the S&P 500, the NASDAQ, and the Dow Jones. We had a pre-market plan for the S&P 500, so we'll start there because it was jam-packed. And boy, let me just be the first to say, none of these green boxes work. None of them, right? But there was a reason and a very thought-out thesis behind this when we talked about it in the pre-market prep, which I strongly advise you guys to show up for. We usually go at about 8:50, 9 o'clock Eastern, breaking down my thoughts in real time. So the conditions, bullish retracement of a bearish trend, meaning whenever I say this, right, I'm still bearish, right? Whenever you see this logic here, it means I'm still very, very bearish, right? Because a bullish retrace means that it's probably going to be followed by a bearish expansion, right? So as long as we were above 57.1050, the weekly fib, the market was bullish. As long as we were below 57.79, the market was bearish, right? If you look back at 57.79, which was yesterday's high, we never even sniffed that shit, right? We never even sniffed it. We couldn't even get back above 57.50, which was the daily fib, okay? Macro, the bears continue to bring the pain as we broke through previous day low in the overnight session, indicating we may want to trade lower. However, and I'm going to talk about this mistake here, but the way that I was reading this at the time was London has appeared to bring the low of the day, but the downtrend is very strong, so we could take it out early today. I want to look to continue to participate in the downtrend as price ascends, not descends, ascends, right? So I should have been looking to get short inside of the bottom of my chessboard here. ADR on the day was 88.25 or plus or minus 1.5%. But if you showed up to the pre-market prep, I explained that this ADR had been low for 2 days, and I was expecting us to basically double this on today. And I couldn't have been more correct, right? So bearish, I was looking for the extremes to be tested again. If we came up here, I was definitely looking to go short. That never happened, right? Inside of the downtrend, look to short the high of the range and long the lows, or in parentheses, break and retest from the highs or lows. This is placed here specifically for days like this, right? Because over my back testing, I started to realize whenever we get tight consolidation or whenever we get a strong down or uptrend, the market loves to come back to the low of the PM session or to the high of the PM session to go higher or go lower, right? You can see the break here even on the 4-hour, and price came right back up here at 6 a.m., back into the chessboard, and then completely flushed. Where was those levels? 57.79.75 through 57.60, right? And then at the low, 57.43, right, through 57.20. I actually ended up catching the 57.43 level in the overnight, right? I wrote it down for 13 points, got out. Turns out probably should have held that shit all day, right? But it's all good. The low is 57.20, right? But again, the line in the sand for me was 57.10.50 for the market to be extremely bearish. We had the daily range lows here that the market ended up treating like a breaker, right? Just straight up flushing through this shit. And then the 4-hour support zone here, where I think they would have taken this out had they had more time, right? Like, I'm pretty sure they probably gonna take this out for Tokyo, no cap, right? So, because there's no wick on these candles, so I'm pretty sure they would have taken this out if they had more time. All right, so let's go to these smaller time frames. Let's talk about a few things that I missed in regards to my pre-market plan. Right, again, like I mentioned, if you guys want to check out the trades that I took, they're in the shop trade ideas, they're in the trade reviews, sometimes they're in the stock VC, they're all over the place. Whenever I take a trade, I usually take a screenshot, unless the loss is so fucking fast that I'm literally talking about it live and I get smoked. I'll be like, oh, there's no need to take a screenshot of that. I just told you what happened, right? But if the loss is a longer developed loss, then I will take a picture of that as well and post it so you guys can see that of course I take losses. Of course I take losses, right? So the trade that I took, again, you can go check it out, but here's what I missed in regards to the 5-minute chart, right? So when I woke up in the morning, I usually try to figure out where 350 price is, right? Because that usually is an indication of where London left the nuggets, right? So if you look over here, right, where London left the nuggets was right here at 350. Right at 350, I thought, oh shit, that's the low of day. Well, instead of thinking with my structural brain, I was thinking with my just time and price brain, right? But if I would have just taken 2 seconds to look at the structure, right, I would have easily saw that this low, and let me get my little toolbar here. This low right here, first of all, this is a weak low because the high is up here, like the swing high is way the fuck up here, right? But let's just talk about it from here. So this low brought this new high, okay? So that means that everything from here to here technically is bullish, even though it's in bearish character. The second we drop below these lows right here at 57.28, and did we drop below them? Yes, we did, right? Everything from this low or from this high to this low was bearish, right? That means that if that's the case, from this high to this low, right, is the previous low, previous high that brought this new low. So all I needed to do, right, to remain bearish and give myself a way to enter, because you guys hear me say all the time, like, I hate when price is down here at the lows. Like, I feel like I'm not getting in, but like, I'm just going to continue to follow structure while also paying attention to time, right? And the one thing that I didn't do on Friday is, like, I didn't pay attention to the structure as much as I was paying attention to the time, okay? So it's 6 a.m. This is crucial, all right? This low brought a new high, basically the same thing that it did over here, okay? So that means that everything on this side of price is technically bullish until they break this low. However, it's a retracement of this range, right? This is why I say you got to understand the ranges, right? So we're inside of the bearish character, creating bullish character because we got above this high. The only character that's going to win is the bearish character, as long as this high is intact, okay? Not to mention the higher time frame is telling you to be bearish, right? But this was the entry, beautiful, right? And then we failed to get to 50% again, and inside of 750, which I don't trade this cycle, I just use it for information, right? We got the 9 o'clock drop and the aggressive rally, which got people induced, including me. Like, I was induced by this, and I said, okay, I'm gonna wait till price comes back down here. I'm gonna get long. So I got long, but I understood the assignment slowly, right? It came to me slowly as I was like, when I was setting up the trade, I was like, where can I go with this? It's like, well, I only need 15 points, but I don't think that I would hold this up here at all. Like, I'm gonna look for 57.30. So I got out 57.30. And then the market just commenced to absolutely flush, all right? Important part of this is that you understand that when you identify the highs and lows of structure, you have to allow those highs or lows to be broken before you change your thesis, right? If those highs and lows aren't being broken and the market's rallying aggressively up to your position, it's just to scare you out of the position or scare you from participating in the true move. That's basically what they're doing, right? But that's what the opposing party would think. The reality is they're just inducing one side so they can dump on the other side. So however you view that inside of that, that's how it's going to be, right? But let's go down to the macros. Let's follow price, right? Let's go on down to the 1 minute, and we'll talk about how price was delivered, because again, a lot of people got nuked on this day, right? And it's the reason why I'm going to spend a little extra time on it, because I want you to understand a few things about today, right? So a lot of people got nuked. Why? Because everybody was trying to get long on this dump. Well, how can you avoid that, right? Well, first of all, get the fuck off the 1 minute. That's number one. Just get off the 1 minute. If you see the market completely dumping, zoom out and go to the 1 hour or the 4 hour. If all of those candles are closing red or aggressively selling down, no need to even look at the 1 minute, right? Either get the fuck away from the charts or figure out a way how to enter into the market, right? Like, I'll be teaching a class later this weekend about like consolidation, specifically referencing the example that was given on us today, because I really, really hate when people have a really great week. And I know what the fuck this shit feels like, right? I'm talking from experience. I hate when you have a great Monday through Thursday only to give it all back, getting smoked on an aggressive downtrend or uptrend day when you just could not stop doing the opposite because you just did not believe that the market could go down 120 points in one day? Because I mean, it definitely did. But for this video, let's just talk about the structure. We come up into 930 brought us down, so I expected a rally up. If 930 rallies back up and it doesn't take the high, guess what? We're bearish, period. 950, we get the rally push up. Then we get the 10 o'clock candle. Guess what? If this 10 o'clock candle came out and it could not even break back above the weekly fib, again, 57.10 and below, it's juicy. Market hits 57.10 and it's just straight sell down from there. I think this was like a 50-point move or something like that. And then we went into the consolidation. So this is the part where most people got smoked. I guarantee you, right? After this dump, everybody and their mother on the first sign of buying, they wanted to get long here. Fine, great trade. But what they didn't consider is I probably need to get out here if the market can't break this area, okay? So they watched their profits go to absolute shit. They probably didn't catch the bottom. They probably got in on this retrace at 57. And then by the time they hit 64 or 65, the market was dumping on their asses, right? Then they tried another long here, right? They tried another long here, right? They tried another long here, and they was like, I'm gonna hold this one. This is good. It gets up here. All right, now we just need to take this high. And you just sit there watching it. Speaking from experience, right? You're sitting there watching. It's going to take this high. This is just a pullback. Okay, this is still just a pullback. Oh, we're consolidating. We're going back to take the high. All right, we're good. I'm back in profit. Dump. Loss, right? You go long again. Same shit. You're begging the market to take out the highs. And what did you miss? You missed the fact that we were slowly making lower highs, lower lows, while baiting you to go long at every single low. The way you get around this, in my opinion, this is how I get around it, is as soon as 10 o'clock, as soon as anytime we have an aggressive dump or aggressive rally and we break through major structure, I say this 1,000 times over, especially if it's in the 10, 11 o'clock hour, right? Like you can almost bet your bottom dollar they're going to consolidate it into about 12 o'clock, 12:30, right? Whether they plan on rallying it back up, right? Or, dumping it further, especially if they plan on dumping it further. There's a couple things you can do. One, draw a fucking chessboard. Intraday chessboard, right, will keep you out of a lot of fucking trouble, right? All you got to do is draw a motherfucking box and just wait for the market to hit the box. Because at worst case scenario, it runs your stop and you're like, okay, then it wants to go higher, right? Best case scenario, you've identified the extremes of the intermediate consolidation, which is extremely powerful in a downtrend. When a downtrend is happening, I struggle, right? Or an uptrend is happening, I struggle, but I'm working on it this weekend, hence the reason why I say I'm gonna make a video. My thought process is you need to master, right? Shout out to Pip. You need to master the consolidation. Once you master the consolidation, the expansion is easy. I've chosen to use my chessboard because it helps me master the consolidation. The chessboard doesn't work for you. Let's get together and let's work on something, right, that helps you master the consolidation. Because once you master it, you start to understand it and you stop getting faked out by it and you start to understand how you can participate in it. I'm a reversal trader, so I like to trade extremes. What this consolidation chessboard does for me is it turns the consolidation into two different extremes. The high, right, that came down and brought this low at 11 o'clock. As long as this high is intact, I'm looking for shorts because I believe in the downtrend. As long as this low is intact, well, I can scalp off of it. That's basically it. Until this high gets taken above 57.70 or 56.70, or even better, 56.83, I'm looking to short the market, okay? So now you're not looking to get long, you're not shorting here in the middle, longing here in the middle. This is where everybody get messed up. I guarantee if you take a session value profile, this is where the POC is, right? In between this consolidation. But if you understand where the extremes are, you can be way more successful, right? So I find the high, I find the low, I mark it out with a box, and I wait for price to come back up to the side that I believe is in control. The market comes up here, you can get short, and then you're never worried anymore, right? Now, boom, you're instantly inside of the downtrend that you failed to make a part of. Now, as the market comes down in the PM session, you do the same shit, right? You could draw a box and say, okay, this is PM session high, right? Hold on. Yeah, this is PM session high right here. And all I'm looking for, and I'm just giving a quick lesson on this, because again, I know a lot of people got smoked on Friday. And I'm not saying it's y'all, just saying maybe somebody else that watched this video, right? Maybe they got smoked too, but I know people got smoked, right? The market comes up to this high, right? And it creates this low right here, right? At this point, I can tell you right now, I would probably been looking for longs, right? No doubt about it, right? But I would have said, okay, when the market comes back down here, I'm looking for longs. Guess what? That trade would have worked out, right? I just got to know that if it doesn't break this high, right? I would have probably just been aiming for this high, but if it doesn't break this high, I definitely got to get out of the trade. Look how many trades this is. The market comes to the high, you get short. The market goes to the low, you get long. Market goes to the high, you get short. Market goes to the low, you get long. And then finally, if it goes to the high, you get short again. All because you drew a box, right? That allowed you to understand the structure. 2 boxes is all you need to not get smoked, right? And a little bit of study time, right? Once you understand the highs and lows of the market, you can do whatever the fuck you want to do. You just have to be patient enough to control it and believe what's going to happen. All right. That's my breakdown for the S&P 500. Let's move over to the Dow Jones quickly, because I think that I've ate up a lot of time on this one. We're at 16 minutes. So, all right, let's go to the 4-hour. Okay. Conditions, bullish, bearish, or bullish retrace of bearish trends, same as the S&P 500, right? And then we had bearish as long as we stay below 43,153, same in wall. We did that. And we were bullish as long as we stayed above 330, 42,330, line in the sand. Notice how when we got below 330, we came back and retested it, and it was the line in the sand. It was a nuke session, right? Now, I debated when I was making my plan, right? And I want you to know how I came up with this. When I was making my plan, the ADR was 600 points, right? So I drew it from the daily fib, which I thought was the high, 600 points. Now, my thought process was this. The ADR was right here, the weekly fibs right there. I would look to get long right there. That's a powerful long. But if not, we can get long here. The market, again, had other plans to the downside. This thing displaced another 340 points. And that's why I said, hey, we've been consolidating for 2 days. We could double up, right? What we did as far as our output, okay? Market ended up doing that. But the macro, we still have yet to fill the gap left behind from Sunday, right? At the time, Dow Jones had left this gap open, right? I knew they was going to fill it, right? Look for sellers to finish the job, and then a recovery can begin to bait buyers in for Monday. That's why I was looking for the weekly fib to hold, because I thought they would bring it down to the weekly fib to rally it back up, right? To trap buyers, swing traders going into Monday, right? Because we had all of this empty space up here. They were like, nah, we good. We're just going to dump it right now, right? So ADR was 600 plus or minus 1.42%. We ended up pushing down 2%, 2.29%. So again, the ADR was off, but it's live price action. It's always trumped by, everything. Live price action trumps everything. So anyway, our range, 42,836 to 42,734. Low, 42,600 through 42,457. And again, we had our bearish and our bullish plan, but more importantly, the range, right? The engine that gets this show going is right inside of that range. Because if you come down to the 5 minute, you can see I'm not even going to turn on macros, right? I'm just going to take this red box off so you guys can see it a little better, right? You can clearly see exactly what the market was trying to accomplish. We came up into 930. First of all, we broke the lows right here, barely, but we broke them, right? We broke the lows, came back into the bottom of the range, and then we just straight up melted right to weekly fib, the same way S&P did. It was just lower. And once we got to weekly fib, we retested it and we failed. We retested it again and failed and came all the way back down to the daily range, bottom of the daily range, which is exactly what we talked about on our top-down analysis, right? You tune into those top-down analysis, these market reviews, I'm dropping as much information as I can possibly do, right, in that little time frame, right? And when I tell you this market played out exactly, right? If you go back to the S&P and you go back and watch that video, I said, watch the 200 EMA. I said, if you watch the 200 EMA and we come up here and we fail on the daily, we're going back down. We failed. You look at the 200 EMA on the Dow Jones, right? We swept it, right? Went back to the end wall, failed, and it was night time, right? And the one that did it the best, of course, because I said a long time ago, when we come down, the NASDAQ is going to lead this charge, right? Came up here, couldn't even get to the 200 EMA, and immediately failed. The reason why the NASDAQ is going to lead this charge down is because it's full of tech. When tech gets dumped on, which they were absolutely getting reamed on Friday, when tech gets dumped on, the NASDAQ is going to lead that charge to the downside. So if you want the max volatility, the NASDAQ is where you're going to be, right? Like this thing is going to really dump as these techs continue to sell off, right? But we look at the NASDAQ, guess what? It was the same setup, but it was even cleaner, to be honest. Like low key, like I'm so interested in trading all three of my instruments because all of them provide something different, but they showing me the same thing. And sometimes the setup is just better on on one instrument than the other one. And this setup here, oh my goodness, we broke my chessboard low definitively for London. All right, that would have immediately caught my eye, right? And then we came back up and just gave the classic break and retest of the PM session lows up here at 645 inside of 930, right? 9 o'clock, we rallied back up and gave the same setup, right? Swept the high, gave the same setup, dropped again, and right inside of 930, 10 o'clock candle, or 930, 945, 950, traded up into 950, and it was night time. The NASDAQ was the best structure by far on the 5 minute of the other three, right? The S&P was a little bit more choppy. The NASDAQ was very clean, right? Again, because it's the one that's receiving the most volatility, right? Like it's dumping it doesn't have anything to hold it up, right? Because it's just tech, right? Even this consolidation was cleaner on the NASDAQ, and the direction couldn't be more definitive. Like, yeah, it was choppy, but yeah, this thing was straight to the downside, right? Last but not least, let's take a look at the volatility index, right? And again, if you came to the top-down analysis, I drew this purple line and I said, these are where the stops are, right? The market is the market is bullish. I mean, the market is bearish, so the VIX is bullish, but the structure is the same. We're looking at the same type of structure, okay? If the VIX is truly in bullish character, for the first time, it should want to make a higher low instead of bleeding out like we're so used to. Well, I would say that this is a higher low, right? We consolidated down here. We held, we swept. Then we not only created a pump out, we held the structure, and then we took out major highs, right? Which means we're in an uptrend, right? We're in expansion mode. So one of two things I expect on Tokyo. I kind of expect this to keep going, if I'm being honest, right? Like I honestly would expect the gap down, right? Now, would that put people in pain? No, right? Like not sellers, they actually be in profit, right? But I'm expecting a gap down because I'm expecting us to continue to go down a lot further going into this week. I'll talk about my targets and all that stuff moving into the top-down analysis, but I'm expecting us to break a major level, which is I think it's 37, right? I think is this August 5th? Yeah. So in the next 2 weeks, I'm expecting the VIX to be in the 37s and the 38s, right? Because of the level that we're targeting. So I would say that the VIX could probably see a big day Monday, Tuesday, right? And then start to recover right after we hit like the 29s or something like that. So just pay attention to the development of price. We'll talk about that more on the top-down analysis, but this has been a long episode of the Market Review. My name is T. Hobbs. This is the Trader Shop, and we'll catch you guys on the next one.